Eurozone economy seems resilient to trade uncertainty, but ECB policymakers sound cautious. This is Macro Matters, and we're talking about the ECB. Europe is facing the threat of 30% tariffs on its exports to the US and a steep rise in the euro that makes those exports more expensive, but its companies seem to be holding up. Germany's IFO survey showed business sentiment rising for the 7th month in a row. ECB policymakers still sounded cautious this week, but that didn't stop several big banks scrapping their forecasts for more rate cuts this year. Holger Schmieding is chief economist at Berenberg. Holger, what do you put down this greater confidence to? Do companies and investors think that a trade deal with the US is essentially done?
Well, a trade deal with the US is not done, but it seems fairly likely that there will be a deal. We've had deals with other countries, and the rumors over the last few days that probably the US tariff on imports from the EU will settle around 15%, they are comforting, because the 15% would be an additional 10% on top of the almost 5% that we already had in the past. And that is sort of in the realm of bearable. In addition, we know that domestic policies, especially in Germany, are turning more growth friendly. So there's a bit of relief in the business community, especially manufacturing, that in the end, this may be bearable.
Earlier this week, markets were pricing in at least one more cut from the ECB this year. Those odds are now going down. Do you think the Eurozone economy might not need any more stimulus?
In my view, the Eurozone economy does not need any stimulus. Our forecast has been for a long time that the European Central Bank will stop at a 2% deposit rate, and that actually the European Central Bank will then either late 2026 or early 2027, have to raise rates again. And in a way, ECB President Lagarde yesterday moved slightly in that direction. She left it very open as to whether there would be another rate cut. And she pointed to the recent resilience of the Eurozone economy. And she also pointed to, well, the strong euro may not be all that bad, at least relative to other challenges, including the US tariff threat. The strong euro is not such a big obstacle for Eurozone manufacturing. It is the current uncertainty, which is a big obstacle. And if that uncertainty fades with some trade deal over coming days or weeks, then the outlook for the Eurozone economy would not be bad. That's a view that we share with the European Central Bank, apparently.
Can you be so relaxed about the strong euro, though? Isn't it rising too far for the central bank's comfort?
I don't think that the euro is actually all that strong. It's the dollar that is weak, much more that the euro is strong. And again, relative to other challenges, especially the challenge coming from Trump with his tariff threats, this is a second-rate issue. So what we have to offset the impact of the stronger euro is that ECB policies have been relaxed in the past and that these policies are feeding through in the real economy. We saw that again with a further uptick in bank lending to households for mortgages. So ECB policy is working. If there is no new shock, such as a big tariff shock, all the ECB needs to do, and all what the Eurozone economy needs, is to just let the monetary stimulus for the Eurozone and the German fiscal stimulus work its magic.
Should they be concerned, though, that inflation might fall too low, especially if US tariffs cause other countries to sell products more cheaply in Europe?
That is indeed a significant concern. Inflation may temporarily undershoot. But so far, we see that the labor market in the Eurozone is very resilient. Unemployment is still very close to record low in the Eurozone, and that means that after a bit of a lull near term, wage inflation will probably pick up again late next year and in 2027. And a forward-looking central bank should not look at the current deceleration in wage growth, which is a reflection of the recent weakness of the Eurozone economy, but the ECB should trust its own forecast for a pickup in Eurozone growth and conclude that with a little lag, wage inflation will re-accelerate, say late 2026 or 2027, and that as a result, well, domestically generated inflation will not undershoot for long, if the domestically generated inflation undershoots at all, which I doubt.
That was Holger Schmieding of Berenberg. Don't forget, you can watch more videos on Reuters.com.